Hello there. Today in this presentation, we are going to look at financial planning. And financial planning actually leads to wealth creation and ensuring that you are having more assets and liabilities. And it's important to always plan financially. So, without much ado, let's go into it and look at the steps on how to do it. So, financial planning, you should be able to ask yourself these questions. Uh, is financial planning meeting your financial goals, your current financial planning? Where are you now? What you need to do in the future, and what you need to do to achieve realistic goals. To do is a big thing, and that means you have to exercise this every day. So, when you're doing that, do not lose focus on your financial goals, and you need to remember these four key pillars that really helps you plan financially going forward. So you have to look at family protection in the future. What do you need to do? Debt reduction, savings, and emergencies. So let's look into this and how do we delve with family protection, debt reduction, savings, and investment, and going into making sure that you have an emergency fund. So this is financial wellness is grounded on the following. You have to start saving. You can save in a circle, but you can't save in a bank, but you can invest in a bank. You can invest in money market funds, you can invest in fixed deposit, you can buy shares, that is still part of investment. There are government papers, you can buy treasury bills, treasury bonds, and we have governments coming up with infrastructure bond, which are um, tax free, which are very important. You can leverage on that. Unit trust, you can do money markets, fund, fixed mutual fund, balanced mutual fund, and equity fund. You can also do life insurance, either for education, for investment, and for pension. You have to do that and ensure that you are protecting your family. So, what are these things that you need to mitigate to ensure financial wellness? You have to ensure that you have medical covers that helps you in terms of your savings are very consistent because when you have medical challenges and you don't have a cover, it can really interrupt your saving and investment plans. So, of course, life insurances that give you you work on the funeral kind of aspects. We live in a society where we have people around us and so forth. You can also do property, ensure that you are working on assets rather than liabilities, assets that can give you passive income if you have another income. Retirement, you have to ensure that you plan for your retirement and this ensure that you have pension, you have investment that can give you income once you retire. And for school fees, since these ones you might want to pay for yourself, for your kids, or for your family, you can plan for it as well. So, what is the function of wealth? Uh, is it that the more one has, the wealthier he is, or what it is? Is it true or false? Can the statement be true? Personally, and on this hand, I can tell you that is a false statement. The more one has, the wealthier he is a false statement. Wealth is a function of savings, not earnings. Savings, not earnings. So it's important to know that aspect. So when you go into savings, what are you looking at? Depending on your financial plan, how you want that liquid cash, you can go from cash and cash equivalent investment to real estate. From cash and cash investment, those are funds or this is a type of movement that ensures that you can easily invest on liquid cash, liquid investment that you can easily liquidate within a few months or weeks and moving forward. So there's so many other aspects. You look at, do you want to invest for long term? More than a year or less than a year. So these are kind of options that you should be able to look at. Let's look at inflation and how that has really affected investment for those investing in the banks. Can you invest in a bank account? No, you can't. Keeping the money in the bank account is not investment. It's actually uh, deflates your money. It's actually uh, ensures that your money doesn't grow when you have it in your account because of inflation. Because there's bank charges, there's comes with so many other aspects. The money that you have in your account, if it doesn't grow, that value in 1 year or in 2 years will not be the same. The value for money. Let's look at this example and what it has done in our day-to-day lives. So the cost of living has really gone up. Let's look at Kenya shillings 5,000 in 1970. In 1870, it could buy you a relatively what could be referred as a prestigious asset. In this case, this is either a parcel of piece of land or a car. You could get a car in 1970 for 5k. Let's come to 1980. At 5,000, you could only buy a motorcycle at that point. 1990, you could only buy a bicycle. In that case, a Black Mamba bicycle, not a mountain bike. 2010, this could only buy you a shoe. And right now, a shoe has gone up to around 10,000 to 15,000, depending on what kind of a shoe you're looking for. And um, going forward, you can easily see that the money has really lost value, and you can easily buy a pair of socks at 5,000 today, or a pair of tie, and so forth. So you need to look at that aspect. So let's look at emergency funds. How do you create this kind of fund to ensure that some people will be asking themselves, what is emergency fund? How do I create this, and what does it entail? So you can have emergency funds for a few things. For instance, you can have 3 to 6 months salary as emergency fund. That can only cater for your needs, your basic needs, and the needs you're paying for every day. That ensures that you have that just in case of retrenchment, your contract ends, your business doesn't do well, or you have family issues and certain events that happened in the family that did not enable you to continue the business or employment. So you have to have that kind of emergency fee that for 6 months you can help you, 3 to 6 months can help you to plan for your life. So you can put that kind of emergency fund. You can put it in investments so that it grows, but you also have like named it so that you don't have to use it for any other work. You can put it for car repairs just in case your car breaks down, or you have services after every 6 months or 1 year. You have to buy this and change that. You can put that kind of emergency so that you don't use the money in your budget that you not planned for. Medical expenses. Well, some things are uncertain and can help in it can happen in life. So you can put that aside and ensure that you have some things to cover for medical expenses, especially if you know you have ailments that come with genes and so forth. You can look at your family and you can put that aside, or it may not be even you, it can be your family, your extended or nuclear family. So you have to put into that if you're not actually having a medical cover to cover that. On retrenchments, you might not know what will happen in the future. The technology is very dynamic, there's a change of that, and robots and systems are taking over work. For example, look at the McDonald's example. They're looking into in a few years they'll be having zero employees and they'll be having systems. So you just click, you want a burger, you want pizza, and so forth. And you've seen hotels nowadays serving with robots and so forth. So jobs are really becoming scarce and employers are trying in so many ways of making more money and reducing on expenses. The biggest expense could be staff costs and so forth. So plan for that. That take insurances, take pension, and so forth. So those are just a few types of emergency funds you can put in place, but you can easily define what kind of emergency you want. Let's see how to plan. Do not plan like this. Your lifestyle could not be taking a very big chunk of your budget and so forth. Your wealth comes and security. You can see security is so little. However, please plan like this. Put a base. If your base is so strong, that means you can be able to tackle any other thing that comes and you can broaden it when you want. So this is just a relatively example of how life and financial planning works. So you have to really sacrifice when you are young to create and ensure that you have a bigger future. For more of this, you can subscribe to this channel, and I will be looking into the 40 years of working. An example could be you're working from 25 years and retiring at 65, that is 40 years. So how many salaries do you have? 480 salaries. 480 salaries. When you pass by 25 years or less, or if you will not be working up to 65 years, that reduces. So are you going to leverage on that to ensure that you have put in place a financial plan for your future and so forth. So keep to this channel, and for more of this, kindly subscribe and we'll be glad. Thank you very much, and God bless.